All right, let's try to make some sense now of what has happened this week in the world of investments. We have Ward McCarthy. He is the chief financial economist for Jefferies Co, and he's been focusing on treasuries, and he says that this week has been crazier than he's ever seen it. Nicholas Heymann, equities analyst, senior equities analyst for infrastructure at William Blair Co, and he posits that maybe now might be a good time to buy some industrial shares. We also have Frank Holmes, chief executive of U.S. Global Investors, and he's got his eye on the gold markets as well as what's going on in metals and energy, and he joins us from San Antonio. Gentlemen, good to have you with us. I want to start with you, Ward. All right, as an economist, you get the one hand and the other hand. Did we really lose anything in the economy this week? Was the information that bad? The jobless claims numbers weren't horrible. We got the retail sales numbers up today, 0.5%. And the consumer a little bit worried. But, I mean, has anything really changed in the economy?
Well, the data that we received today is from a time period that preceded the recent chaos in the financial markets.
Right.
Unfortunately, there is a long history that suggests that when you get this type of collapse in the stock market, and also you lose confidence in the government, that consumers take a step back, they lose confidence, and when they do that, they tend not to spend as much. So,
what was the loss of confidence related to? Was it related to the downgrade of long-term debt?
Oh, absolutely. And I think that affected consumers in two ways. First of all, we saw a really unfortunate display down in Washington, I think, that has increased frustration and on an international level raised some legitimate questions about the ability of our federal government to function appropriately. But more than that, the stock market dropped a lot. That means that people lost wealth, plus even people who don't own stocks, they watch the news every night, and from a day-to-day basis, the stock market, probably more than anything else, is the most widely watched barometer of how the economy is doing.
Frank Holmes, do you think that we're in a bear market?
No, I think we're just going through a sort of a mild correction. Currency-wise, is totally different, but the economy is just going through a correction after a big surge since March of '09.
Nick Heymann, you follow big industrial companies such as Siemens, such as United Technologies, 3M. Has anything come off the wheels of those companies to warrant a sell-off of this magnitude?
Not of this magnitude, no. It's about confidence. It's about, like Ward was saying, not just in the U.S. The downgrade now makes people look for rolling downgrades through Europe. And so you've got sovereign country debt that could definitely be downgraded, and then you become closer to liquidity issues. We don't have that here. The confidence issue with regards to how Washington's function certainly is, unsettling, I guess. But no, there's possible reverberations, I guess I would call it, aftershocks in terms of where, to keep your eye on things. Nothing yet on the results for the most part, but I would say it's a gradual slowdown ahead of us.
Well, do you believe that we're going to enter another recession, either in the United States or globally?
It's nothing like '08, '09, where we had a sharp V, and that was obviously, full disc brakes on, lockdown, and then liquidity-driven relief. This is about legislated, policy changes that will hopefully ultimately
This is a man-made disaster.
Yeah, and it's going to be a process to get us out. We don't have all the levers and light switches to flick down at the Fed right now. So I think it's going to be a gradual slowdown, or deceleration. I think it's going to be an extended period of subpar growth, and then I think we'll come back up after 2 or 3 years.
Frank Holmes, a period of subpar growth. Does that square with your thinking?
It does, Pimm. We're seeing money supply. We look at the G7 and compare to the E7, the 7 most populated countries in the world. And the money supply for most of the countries is actually slowing down on a year-over-year basis. And that's a factor to say that we're going through a mild correction. It's nothing like we saw in 2007 and 8. So I think these are positive aspects to it. And some of the emerging markets are trying to wrestle with inflation. But overall, they continue to still show healthy growth. The last thing, Pimm, is that of the S&P 1500 companies, 700 of the companies reported revenue growing at greater than 10%.
Ward, you get this growth in corporate sales. Nick Heymann says, all right, we're going to get slowdown, but it's not going to be terrible. And yet when you look at the stock markets of emerging markets, they're signaling that people are really concerned and worried. They're getting out.
Well, I agree with Nick as far as his economic outlook. And again, I think that what has been driving the market really is more a psychological thing. People around the world look to the U.S. for leadership. And unfortunately, what we've demonstrated over the past several weeks is that our leadership is of pretty questionable quality.
So this is really a political issue as much as it is an economic issue in your mind?
Yes, I would say very much so.
So what are the solutions? Are they only political?
Well, right at this point, yes, the solution, well, the most important solution is political, and that is Congress has to address our budget in a significant and adequate way. And the most important things they need to do are change the tax code and reform it, and also reform the entitlements, which is really what the Bowles-Simpson Commission did last year.
Talking about things like Social Security and Medicare.
Absolutely.
All right.
And once we do that, then we'll be back on a better path.
You think we'll get our AAA rating back?
I think it's going to take years to do so, unfortunately.
Nick Heymann, all right, so you hear about retail sales up 0.5%. That's good. Then you hear about consumer confidence, and you have to remember a cardigan sweater and Jimmy Carter in the White House. How do you go out on the road and try to convince investors or potential investors that all's right with the world's infrastructure companies, like a 3M, for example?
Well, basically right now you're trying to help them understand the difference between value investing, which is most appropriate when you have a significant reacceleration in the macro environment to assist bringing the stock and earnings of those beaten down shares up. And then today, when we have a more moderate outlook for subpar growth for an extended period, we'd probably look more at quality or perhaps growth names that can basically be able to surprise without a positive economic environment. And in that light, we go through stocks. We try to find ones that have disproportionate exposure to emerging markets, as Frank was mentioned earlier.
So what, like a 3M?
3M, yeah, 36%, and that's growing 20%, 25%. And that can definitely be much better growth at the bottom line than when we last looked in 08, 07, and we had the last downturn. And we look for companies that have competitively disruptive products, like our friends at UTX, Carrier.
Right, the geared turbo, the geared turbofan jet engine.
We've got a new heat pump that actually saves 60% of your energy costs. Very expensive. That's the only air conditioning system this summer that's really taken off. All the other manufacturers have had to cut their estimates because they geared for the low end, figuring the consumer would be stressed. And in fact, they're repairing. They're not buying low. And the ones that want to save 60% of their energy costs, the folks with some money, they stepped up and bought Carrier. They're running 3 shifts to make that product for the Infinity air conditioner.
Ward, does Nick have the highlight of something that's going on in the economy, that the consumer is a different consumer than it was in the past? They're smarter about what they're buying. They have a longer-term view than maybe even the politicians in Washington about the way that they're dealing with their own personal balance sheets, because they've been delevering.
Well, there are really two consumers, excuse me, in the economy. One is the high-end consumer who has been spending a lot of money, and everyone else has been struggling along with relatively modest income growth and the possibility that maybe they didn't get their job back. So they have been spending much more moderately. And as a consequence, when you look across the economy, you see a number of these sort of dichotomies. But if I could digress for one moment on the data that was released today, the retail sales data was July data.
That's right.
So it preceded the chaos that we've had since the downgrade. The confidence data is August data. So it did capture some of the reaction to what happened in Congress and also
So we might be putting together we're putting together two different time frames to try to come up with one line, and that's not going to work.
I think the message is that what we need to wait and see is what the August data ends up looking like. I think we'll go through a little bit of a soft patch here for a while, but once people understand this is not 208, and I think we're all agreed on that.
2008.
Then 2008.
That's all right. Yeah, we need those extra 1,500 years. At least.
Then people will get back on track and we'll be okay.
And Frank, during the break, we were all talking about what's going on with the money supply. You wanted to make a point about what's happening in the United States related to the ending of QE2. That happened at the end of June.
Yes, the weekly money supply comes out on Thursdays, and we like to compare the weekly to the monthly. and the trend has actually accelerated since QE2 ended. And that means there's lending taking place, there's money flowing through the system, and it's usually a precursor about 6 weeks out to the market being healthier. So the drama with S&P last week, coupled with just prior to the S&P announcement, was Japan had a huge volatile movement in the currency markets, and that started triggering a series of events that was taking place. We've seen this historically. But I think the fact that the money supply is continuing to grow at 8% on a year-over-year basis, we'll get stability here in the market. But sentiment will still could be negative for another couple of weeks.
Nick Heymann, stability in the marketplace. You were saying that you were at meetings all during the week. The beginning of the week, of course, much worse than what came afterwards.
I mean, people were not on edge. There was not panic. I think that they were really trying to sort this through, and they are trying to figure out what's real, what's not. It's like a house of mirrors. And how do you tell them where to go to get out? And, you know, there were so many different volatile elements. At this point, I think we watch what happens in the Middle East as it relates to oil. You know, there's certainly a lot of issues going on to try to get Syria to kind of clean up what it's doing. And we're not involved. And obviously, if there was a concern, if there's any availability issue with oil, that would not help commodities or, you know, fears about the economy. We'll watch what happens when Europe, you know, as they sort things out. I don't think China's an issue, and I think there's an upside as it relates to the super committee to actually expectations are zilch after what we've been through for 5 months, and now we could actually see some upside if these guys come through.
Tell me about Tyco and use that as an example for the kind of themes that you've been describing to investors during the week.
Right now, if it's choppy seas, we want to have deep keels underneath us, and this is a company with 45% of its revenue that's recurring. About half of that now is actually growing at twice the speed it's historically grown at. So we're looking at 6 to 8% because of a new interactive security system called Pulse, which totally changes your ability to manage your residents in your absence rather than be a passive monitoring. But you also have a good upside in cyclical areas for oil and gas with their flow business. It makes big valves. So it's a good company, very good balance sheet. You know, obviously used to.
And nothing's changed in a week and a half.
Nothing's changed at all.
Ward McCarthy, this idea that nothing's changed in a week and a half, I keep coming back to this. Is corporate America prepared for any kind of global downturn? They've got lots of cash on their balance sheets.
Corporate America has done a great job of making their balance sheets in a good position. There's a lot of cash floating around, whether it's in corporate America, consumers have restructured their balance sheets, and of course banks have 1.6 trillion excess reserves.
So it's only the government that's out of money.
So it's the government that needs to restructure their balance sheet. Everyone else has already started to do it, and even though maybe we're going to go through a little bit of a rocky period here, people are less concerned about it because they do have some cash in their pocket, and it will get them through a rainy day.
Bonds. Tell me about what's going to happen to bonds. The 10-year is the new 2-year.
Well, there's something to say to that. Right now, bonds are just basically shadow boxing with the equity market, and I think they'll continue to do that. Once we see some stability back in equities, the Treasury market will stabilize as well, and I think that's probably going to happen over the next week or so.
Frank Holmes, tell us about energy. Gasoline prices, will they come down?
Yes, I think short term we're going to see gasoline prices come down. But what you have to remember as a backdrop is that we're consuming about 89 million barrels a day. And the capacity that's out there in the marketplace by OPEC is only about 3 million barrels a day. So any type of a turn in the economic activity that we see outside of here, in particular Japan turning its economy around for the rebuilding of what's taking place after the tsunami, we could see oil prices back at $100 a barrel.
Frank Holmes, tell me about the fear and love trade as it relates to gold.
Well, gold definitely made some all-time highs here with that fear trade. And I think in particular it comes out of Europe and the volatile currency movements with the Swiss franc and the euro and those concerns that you saw the credit default swaps spike for France and Germany. So I think that was a key factor in addition to what we had here in America. But in the back of that fear trade of currency devaluations over time, you have the love trade, and Ramadan started in August the 1st. So you have 50% of the world's population have GDPs per capita growing at 7%, and they give gold jewelry 24 karat during this type of holiday.
All right. Well, I see Nick Heymann and Ward McCarthy. They're writing it down. They're going out to get some gold right after the program. I want to thank you all very much. Frank Holmes, U.S. Global Investors, Ward McCarthy, Jefferies & Company, and from William Blair, we've got Nick Heymann.